I've made almost $1.5 million in less than 3 years of day trading. And in today's video, I'm going to show you exactly what I would do if I was to start from zero today. Because the truth is, if I knew what I knew now, I would have become profitable so much faster. I hope you enjoy the video. Okay, first off, I want to talk about a few key points to level set your expectations on what trading is and what trading isn't. Because investing, unless you're a hedge fund, some sort of money manager, you are only buying and expecting price to go up. You are buying low and selling high, and your returns on your investment accumulate over years and years. How is trading different? Well, trading is so different because we can play both sides of the market. We can take calls when we hypothesize that price will go up, and we can take puts when we hypothesize when price will go down. In fact, some of the most profitable months I've had is when the stock market is actually moving down. That is the most exciting thing about trading. You can make money in any market condition. Number two, trading is not gambling, but it can be. Why do I say it like that? Well, gambling to me is about putting money out there with no control and no edge on what you're putting your money out there for. Think about it. If you go to Las Vegas, all of those casinos, those billion-dollar casinos, were built off of gamblers. Do you think that Vegas gives you an edge on anything you're betting? Okay, possibly poker where you're playing against other players, possibly sports betting where you might have an edge. They still take a 10% cut. Trading is different because while we don't have control about what happens to the market after we put money in, trading is about finding a strategy that gives us an edge above the house, above the market. And I'll talk more about that as we get into this further. Number three, trading is work that happens to be fun. Why do I emphasize work over fun? Well, trading, bottom line, is about working to make money so that you can go back to your life and enjoy your life. Gambling and having fun and having a hobby is about escaping your life and enjoying yourself. Why is that so different than having it be work first? Well, if you find yourself trading and over trading, you will find that it starts to become more like gambling, more like an addiction that you want to keep doing because you're having fun. Sure, it can be fun, but it is work first. The focus should be on making money and stepping away when the work is done. I'll continue to emphasize this over and over and over. Number four, trading is about setting reasonable profit targets and growing your account based on consistency and scaling. It is not a get-rich-quick scheme. This is so critical because if you don't have an expectation, a reasonable expectation about what you can make based on how much money you have in your account and how much money you are leveraging, you will slip down the slippery slope and it will become more like gambling. I talk about this quite a bit in my science-backed strategy video. If you want to refer to that video, I'll have a link in the description below. Number five, trading is about finding a proven and consistent strategy and combining it with an emotionless risk management system. This is going to be the bulk of the video. I will show you several examples about how I found a proven and consistent strategy and how I've combined it with an emotionless risk management system that prevents my losses from being greater than my wins. Six, and this is the most exciting point I want to make. Trading is a vehicle to make life-changing money anywhere in the world, working only 1 to 2 hours per day. There is nothing like it in the world. It is the biggest opportunity for you to make money you only dreamed of. Trading is about taking initiative. What are you waiting for? Let's get started right now. Okay, getting started. Just 3 very easy steps for you to get started. Here we go. Step 1, you need to be able to read the market and read a candlestick chart. And the way that I do it is through tradingview.com. Really simply, go to www.tradingview.com, load it up to your computer, load up to your tablet, to your phone, sign up for the Essential plan. Step 2, download the Webull desktop program to your computer and download the Webull mobile app to all of your devices, your tablet, your phone, anything. When you sign up, 2 things you want to do. Make sure that you indicate that you have some options trading experience and that you have a medium or higher risk tolerance. That will allow you to have the level 2 plan, which is what you need for options trading. By the way, if you want a more step-by-step guide to getting TradingView and Webull on your computer, on your devices, you can refer to my second video that I will leave a link in the description below. Step 3, deposit money into your Webull account. Now, the big question you may have is, how much money do I need to get started? And the answer is that it varies. You can start with as low as $500, $1,000, and you can start with as much as $100,000. The thing to keep in mind is that the more money you have in your account, the more leverage you can have, and the more money you can make. It's all about percentages. I will get into this further later in the video. Finally, step 4, let's start trading. Okay, you might be wondering, how do I just get started trading from this video? The biggest thing that you have to do is get these 2 platforms onto your computer, onto your devices. I'm going to save you so much time by showing you the proven and consistent strategy that I've used to make over $1 million in less than 3 years. And I'll show you how you combine it with the emotionless risk management system that I've used that has proven over and over and over to prevent my losses from being greater than my wins, and it will lead to life-changing money. So stay tuned. Here's the strategy and the risk management system. Okay, now that you've got your TradingView up and running, you're on the Essential plan, your chart probably looks something like this. Here are some things that I need you to do to be able to get started trading the way that I do. Number 1, you want to look up here, and this is the stock or the ticker that is showing currently, Apple. We do not trade Apple, so the first thing I want you to do is I want you to go up under the search and I want you to type in SPY, SPY. What exactly is SPY? Well, SPY is the ETF of the S&P 500. It's the most liquid account in the entire world. It is the only ticker that I trade, okay? Remember, SPY is going to be the only ticker you trade with this system. Number 2, I want you to look at the time frame. So the time frame in which we take trades is the 5-minute chart. Now, it might be defaulted to the 1 hour, the 1 day. Make sure you click on 5 minutes. It'll be right here. Step 3, you'll notice that this is all white, okay? And the white represents the New York Stock Exchange open market hours, which is great. That's when we can trade. However, I want you to do one more thing. Bring your mouse down to this hexagon right here. I want you to click it, go under session. It'll be defaulted to regular trading hours. I want you to click extended trading hours. Now, what that will do is it will add the overnight aftermarket session in blue, also known as the Asia session, and it will add the pre-market or London session in yellow. We actually need these sessions on to start building on our strategy every morning. Once you have those 3 things done, you're all set to go, and I'll show you the strategy right now. Okay, you're all set to go. You have SPY, 5-minute chart, and you've got the extended hour session pulled up on your chart. Here's the strategy. And if you're just getting started, I'm going to try to start out with the very basics. We will continue to build upon concepts as you become a more experienced trader. But the system is very simple to start out, and it's something that I believe you can follow right away. First off, the thing that you have to know about SPY and about stocks in general is they tend to trade within a particular range throughout the day. How do we know what that range is going to be, and how do we identify it? Here's what you do. Starting out, you'll notice that price within the yellow or the pre-market found a high at the top of this green candle right here, and it found a low at the bottom of this red candle. That represents what we call the pre-market range. And so I'm actually going to mark that range as I prepare to trade in the New York session. The way I do it is I take my mouse, I'm clicked on this crosshairs here, I mark the top with my horizontal crosshair, and I go over to here and I click the plus, draw a horizontal line. There's my pre-market high, and repeat the process for the low. Put my crosshairs on the bottom of that candle. You can move it so it doesn't have to be perfect. You click, draw a horizontal line, and I'm just going to modify that here. There's our pre-market range. It is the range that we are going to start off assuming that price will trade in once the New York session starts. However, once the New York session starts, we have about 30 minutes of volatility before we look to take trades. If that pre-market range is violated and price moves outside of it or below it, we will modify that range and prioritize most recent price action. Let me show you what I mean. So once the market opened at 9:30 Eastern, on this red candle, you saw price come down and drop below the pre-market low, but move back up. Well, this right here, I am going to prioritize as our new low of our range because most recent price action is going to be more accurate than pre-market. So I am going to adjust my low to 670.69. There's our range. Now we start trading at 10 a.m. Eastern, and what we look for is for price to come down and test the bottom or the top of the range. The bottom of the range is what we refer to as support. The top of the range is what we refer to as resistance. We want price to test and fail to close below support or to test and fail to close above resistance. So 10 a.m. kicks off. What happens? Right at 10:10, we had a test of 670.69 and a fail to close below. Price came back up. It came back down. It tested 670.69 once again. And so it was able to confirm that support is still valid at that level. At that point, what are we waiting for? We wait for a firm 5-minute candle close below support, and we take entry on puts. So what happened at 10:25? We had price come down and close firmly below that level. We bought puts right when that candle closed firmly below support. At that point, we implemented a emotionless risk management system that prevents our losses from being greater than our wins. What does that mean exactly? Well, put contracts, as price is coming down, they will increase. What we're looking for is when we get a close below support, SPY's price has determined that it is going to trade into a lower range. And if price comes back up and tests our level of support once it's closed below, it'll act as resistance and push price further down, causing those put contracts to go up. Okay, that emotionless risk management system that we implement, once we buy our puts, we automatically put a stop loss in at 10%. Once we do that, we are protected from losing no more than 10% of what we leveraged. Now, if price moves in our direction and we get those put contracts to move 10% in our favor, we take half of our position off at 10%, and then we move our stop loss to break even. At that point, we can no longer lose money on that trade. However, once price moves past 10% to 15%, we take a quarter off at 15% and put our stop in at 10% positive. At that point, the trade is going to be at least 10%, and then for that last quarter, we will move our stop along with price, keeping about 10 cents room between where price is at. And if it continues to distribute down, in the case of puts, we will trail our stops until that comes back. Sometimes we can get up to 30 to 40% on that last quarter, and I want to show you an example right now. So what happened? At 10:25, once this candle closed, we bought puts. What did price do? In fact, it came back up It tested our level of support, used it as resistance, and distributed down. We actually got half our position off at 10%, a quarter of our position off at 15%, and then we got stopped back at 10%. Very good. Almost a full trade. Now, the next step, once we've seen price move into a new range, we can assume that our old support level will be resistance, which it was right here. Now we need to find our new level of support. Well, how do we do that? Most recent price action found a low and changed directions here. We call that a swing low, a swing point, or a low. We are going to mark that as our support line. Again, take your crosshairs, take your horizontal dotted line, draw a horizontal line there. There's our new level of support. And here is our new price range. What happened then? Price came up. It did not test resistance. It came back down. You don't quite see it on the 5-minute chart, but it actually did test it during the candle, failed to close below support, and then we got a firm 5-minute candle close below 668.56. We took another entry on puts. Price came up, used that level, which was support, as resistance, and price distributed down. Again, we got half our position off at 10%, a quarter off at 15%, and stopped at 10. Another 2 trades above 10%, just using the system. Again, where is our new range? Here is our new swing low. We are going to mark that as support. Take our crosshairs, line it up, add a horizontal line at the bottom at 667.84. Here is our new range. Well, now what? Well, we can see that price did confirm our old support level as resistance. We found a new support level down here. And when price came back up, it did test, failed to close above our new level, which was support as resistance, and then had a firm close above and distributed up. In that case, we bought calls. We got 10% off and another quarter at 15 before getting stopped at 10%. 3 for 3 on this exact same strategy in one day. At that point, I actually took a break, but if you look and see what happened here, now we have 2 ranges that price is traded within. We had a nice entry on puts here, and here, an entry on calls, and we're back into the range between 668.56 and 670.69. At that point, if I had stayed trading, we would have seen a firm close back below that support, confirmation as resistance, and a nice distribution down to our support level. We tested and we failed to close below. However, if you had taken puts here, you would have had a positive trade. Now, again, I was not back at the charts, but we had another confirmation and a failure to close below support with this wick here. And then on the 10-20 candle, we had a firm 5-minute candle close below support, a confirmation that that level, which was support, became resistance, and a really nice distribution down. At that point, we need to find our next level of support. How do we do that? Again, we look for where price failed to close further, where price failed to push further down. We look for our next swing low. Well, when I started to re-engage the market, I had seen a number of tests, 1, 2, 3, 4, 5, 6, 7, and failures to close below this level right about here, 666.81. And so I marked that level as my next level of support. And what happened? Well, at 110, after failing to close below support a number of times, we had a firm 5-minute candle close below. We took entry on puts, and again, price distributed down very nicely for another successful trade. At that point, we found support again, right at this swing low. So mark my level. Using my crosshairs, I'm going to add a new level of support at 665.02. What happened then? We had a swing back up, a lower high established, and 2 more tests of that level of support. Then at 1:35, we had a firm 5-minute candle close below, and we took puts again, had a nice distribution down. This time we got 10% off, moved our stop to break even, and got stopped. However, another successful trade. Now, if you think you can replicate this system, you'll find entries the same way we do. You learn the emotionless risk management system that prevents your losses from being greater than your wins. You rinse and you repeat every single day. Now, is this system 100%? The answer is no. However, when you implement the emotionless risk management system that protects your losses from being greater than your wins, you don't need it to be 100%. In fact, following this system, you're only aiming for a win rate of about 65 to potentially 70%. And if you can get your win percent to be up near 8 to 10%, and the max loss be 10%, with that win rate, you can target a weekly goal of 3 to 5% of your overall account, leveraging just 10%. At the end of the week, you take your total winnings, you scale your positions up, and you repeat for the next week, targeting that 3 to 5% of your overall account every single week. Once you do that and you scale every single week, you start to take advantage of compounding interest. 3% on top of 3%, on top of 5%, on top of 5%. Every single month, you scale up, you're consistent, you'll start to see gains that you've never seen before. In fact, with this system and consistency and leveraging, you can in fact 12x your returns in just 6 months. If you don't believe me, check out my video below, how to 12x your profits in day trading. If you got a lot of value out of this video, please subscribe to my channel. New content coming every single week once again, including live trades that I took with the group that I trade with. By the way, if you want to join the group that I trade with and learn alongside with me every single day, I trade twice a day, Monday through Thursday, and once a day on Fridays. Click the link below to see if you qualify. See you in the next video.